Smurfing. Smurfing works by using multiple people, called Smurfs, to walk into different banks and deposit cash in small, harmless-looking amounts. Each deposit stays below the legal reporting threshold, making it seem like ordinary daily banking instead of a large pile of illegal money. Criminals often use dozens of Smurfs at once, sending them to different branches and ATMs so the activity doesn't look concentrated. The cash is broken into tiny pieces, scattered across many accounts, and then gathered back together slowly once it looks safe. Some Smurfs don't even know they're helping crime. They think they're doing simple errands or getting paid for easy deposit work. Smurfing is one of the most common money laundering tricks because of its simplicity. It began gaining attention in the 1980s when banks introduced reporting rules for large cash deposits, and criminals realized they could slip under the radar by splitting the money into smaller transactions. Casino laundering. Casino laundering works by going to the casino with your illegal money, buying chips, and making a few small bets just to look like a normal player. After a short time, they return to the cashier and exchange the chips back for cash or a payment receipt that says the money came from gambling. To make the story believable, they might even lose a small amount on purpose. Some criminals spread the cash across multiple casinos or send several people so the transactions don't stand out. This technique works best in loosely regulated casinos or in earlier decades. Today, many casinos must verify customers and report suspicious chip buying and cash out patterns to regulators. Trade fraud. Trade fraud hides dirty money inside fake import-export deals, so the money looks like normal business revenue. A criminal with illegal cash gives it to a partner, often someone overseas, who deposits it into a fake company that already looks like a real business. That company then buys a shipment from the criminal's import-export company using the dirty money, but the invoice is fake and the prices are intentionally exaggerated. Because it arrives as a payment for goods, the money suddenly looks like regular business income instead of unexplained wealth. Banks often see it as ordinary international trade because the paperwork appears to match the story, unless the values, routes, or counterparties look suspicious. Sometimes the goods never even ship at all. The entire deal only exists on paper. Once the money enters the company as clean revenue, the criminal can pay themselves normally, making the illegal cash appear completely legitimate. Front business. A front business is a real or semi-real company that criminals use to hide illegal money inside what looks like normal sales. They usually pick cash-heavy industries like restaurants, car washes, or small retail shops because lots of genuine customer cash makes the inflated revenue harder to question. The business reports normal sales, but secretly mixes in money from drugs, fraud, or other crimes. On paper, the income looks completely legal, meaning it can be reinvested, withdrawn, or moved abroad as if it were honest profit. Mirror trading. Mirror trading means hiding money transfers by making two perfectly coordinated trades in two different countries. A criminal places a trade in one market, like buying a stock or currency, and a partner immediately makes the opposite trade in another country for the exact same amount. The criminal's dirty money goes into the first trade, while the partner's account receives clean-looking funds from the matching trade on the other side. To outside observers, it doesn't look like a cross-border wire between the same people. It just looks like unrelated trading activity in two different markets. Some operations repeat this dozens of times across different markets to break the money into smaller, less noticeable pieces. Because financial markets move fast and handle millions of trades every day, these paired transactions blend in easily. Regulators usually don't notice unless the trades match too perfectly, involve no real investment strategy, or happen over and over with no logical purpose. Hawala Networks. Hawala Networks move money outside the formal banking system, often without bank accounts or standard paperwork. Instead, they rely on trust between Hawaladars, who are money brokers spread across different countries. A criminal gives cash to one Hawaladar, who contacts another Hawaladar in a different place and instructs them to pay the same amount to someone else. No money actually crosses borders, just messages and promises between trusted brokers. Hawaladars set settle their debts later through trade, cash, or favors, leaving almost no digital trail. Because the system is fast, private, and based on personal relationships instead of bank records, it's much harder for authorities to trace, especially when it's informal or poorly regulated. Most Hawala use is legitimate money transfer and trade, but criminals can exploit the same anonymity to move illegal funds. Money mules. Money mules are people who move dirty money for criminals, often without fully understanding what they're doing. A criminal sends them a payment or hands them cash, and the mule's job is to transfer it, withdraw it, or pass it along to someone else. The mule's personal bank account makes the money look like it came from an ordinary person instead of a criminal source. Some mules are desperate for quick cash and get recruited online, while others are pressured or tricked into helping. And in many countries, mules can be prosecuted even if they claim they didn't know what was going on. Criminals use many mules at once, so no single person moves too much money at one time. This spreads out the risk and helps the transfers look normal. In the end, the mule is the one who faces the danger, while the criminal stays hidden behind them. Real estate laundering. Real estate laundering hides dirty money by turning it into property that looks like a normal investment. A criminal uses illegal cash to buy a house, apartment, or a whole building. Because real estate prices vary widely, it's easy to overpay or use strange payment methods without raising too much suspicion. Sometimes the criminal buys the property, keeps it for a while, and then sells it later so the sale profit looks clean. Other times, they rent it out, using the rental income as a steady source of legitimate-looking money. Expensive homes, luxury condos, and empty apartments are especially popular because they attract less attention. Round tripping. Round tripping is a laundering trick where criminals send their own dirty money overseas, only to bring it back later, as if it were foreign investment. First, the criminal moves illegal cash into an offshore front business, usually in a place with weak banking rules. That company then invests the same money back into the criminal's home country by buying shares, funding a project, or lending money to a business the criminal controls. Because it arrives from abroad, the money now looks like fresh investment instead of suspicious local cash. Governments often welcome foreign investment, so these transfers rarely raise questions. The criminal ends up with clean money that appears to have come from a legitimate overseas source. In reality, it's the same dirty money making a trip around the world and returning polished. Crypto mixing. Crypto mixing hides dirty cryptocurrency by scrambling it together with many other users' coins. A criminal sends their dirty cryptocurrency into a mixer, which blends it with many other deposits, and then sends back different coins that can't be easily linked to the original source. The mixer breaks the money into random pieces, routes it through lots of wallets, and returns it in a confusing pattern designed to erase the trail. Some mixers even use special privacy coins that make tracking nearly impossible. To anyone watching the blockchain, the money looks like it came from anonymous users instead of a criminal wallet. Mixers are popular because they work quickly and don't require names, IDs, or bank accounts. In the end, the criminal receives crypto that appears brand new, even though it originally came from illegal activity. If you liked this video, make sure to watch these two and hit subscribe so you don't miss the next.